Hello, and welcome back to the Quantamental Investors YouTube channel, where we dive deep into individual stocks to separate wheat from the chaff in the midst of the asset bubble we are living in right now. If you're new here, don't forget to subscribe and hit the bell icon so you never miss an update. Today, we're exploring Alibaba, the Chinese tech conglomerate. In its latest earnings report, Alibaba has left investors with a lot to digest. Despite a significant drop in net income, the company showed accelerating revenue growth and early signs that strategic investments in its core businesses are starting to pay off. Let's break down the key takeaways from Alibaba's Q4 FY2024 report together and take a look at its valuation. Earlier this week, Alibaba Group Holding Limited reported mixed results for Q4 FY2024. The company's revenue grew by 7% year-over-year to RMB 221.87 billion, or approximately $30.7 billion, beating street expectations by about 1%. This growth was driven by strong performances in the Alibaba International Digital Commerce Group, which saw a 45% year-over-year increase, and Cainiao Smart Logistics, which grew by 30%. However, profitability took a hit. Adjusted EBITDA declined by 5% year-over-year to RMB 23.97 billion, and operating income decreased by 3% to RMB 14.76 billion. The most striking figure was the 96% year-over-year drop in net income, primarily due to mark-to-market losses on publicly listed investments. Despite the profitability issues, Alibaba's strategic investments are starting to pay off. The company has been focusing on its core e-commerce and cloud businesses. For instance, the Taobao and Tmall Group achieved double-digit GMV growth, driven by improved user experience and price competitiveness. Alibaba Cloud also showed promising signs, with its core public cloud offerings growing by double digits year-over-year and AI-related revenues experiencing triple-digit growth. This focus on high-quality revenue streams is expected to yield sustainable long-term growth. Shareholder returns and future outlook. In recent quarters, Alibaba has been aggressive in returning capital to shareholders. In fiscal year 2024, the company repurchased $12.5 billion worth of shares, achieving a net reduction in share count of 5.1%. Despite its profitability struggles, Alibaba bought back $4.8 billion worth of BABA shares in Q4 alone. Moreover, Alibaba's management has set a goal of achieving a net share count reduction target of 3% per year for the next 3 years, with annual buybacks estimated to be around $12 billion. This, along with a $4 billion dividend for fiscal year 2024, underscores management's confidence in Alibaba's long-term prospects. Looking ahead, Alibaba is focusing on several strategic priorities. The company is investing heavily in AI and cloud computing, which are expected to drive future growth. They are also working on enhancing the user experience across their core e-commerce businesses and expanding their global logistics network through Cainiao. Now, let's talk about Alibaba's valuation. Despite its challenges, Alibaba's stock appears deeply undervalued. Currently, it trades at approximately 9 times price to free cash flow and 6 times enterprise value to free cash flow based on trailing 12 months TTM free cash flow of $21.6 billion, a market cap of $191.43 billion, and net cash of $61.8 billion. According to our valuation model, Alibaba is worth around $195 per share or $476 billion, indicating it is significantly undervalued at current levels. Assuming a conservative exit multiple of 15 times price to free cash flow, Alibaba's stock could be trading at approximately $490 per share 5 years from now, implying a 5-year compound annual growth rate return of about 44%. Given the asymmetric risk-reward on offer, Alibaba remains an attractive investment opportunity for long-term investors despite ongoing geopolitical tensions and regulatory challenges. In conclusion, while Alibaba's Q4 FY2024 report was quite mixed, the company's re-accelerating revenue growth and strategic investments provide a promising outlook for the future. If you found this video helpful, give us a thumbs up and share it with someone who could benefit from these insights. Don't forget to subscribe to our channel for more content like this. Have any questions or topics you'd like us to cover? Drop a comment below. Until next time, happy investing.